What's going on, everybody? Tiger here. Hope you're having a wonderful weekend. Just thought I would do a quick weekend video, kind of a review preview, if you will, review of the previous week we just ended on, as well as a little bit of a preview for this upcoming week. I personally got into a handful of trades at the start of the week, but then it just kind of died off. The momentum did, guys. It was a really busy Monday and Tuesday. And then for the life of me, come Wednesday, Thursday, Friday, I didn't get into a single trade just because the alerts I was looking for, they just weren't quite hitting the way I wanted. And I get very picky when it comes to supply and demand zones. I only look for the best. So there were two or three different times where I did skip a zone that did bounce because of one thing or another, only for them to turn out and run away and turn into a would-be profit. So it was a little annoying, especially Friday. I had one that I missed by zero point 0.4 pips, guys. That's less than 1 point, less than 1 pip. Just needed it to go a hair farther to tap into an overhead supply zone in this case for me to short sell it. And sure enough, it missed it and then proceeded to drop and keep on going. So it would have been a perfect trade, but I did not break my rules because for me personally, guys, I have my most success when I'm hunting down unfilled orders in supply and demand zones. So everything else hit except for my number one piece of information I look for, but it doesn't matter. It went on. So anyway, yeah, that was Wednesday, Thursday, Friday, a little slow. But as far as the week overall, from a market, like a market tone perspective, it did start off a little on the slow side. We had, of course, the holiday, some thin liquidity for the President's Day, for the Lunar New Year as well. It did lead to some choppy ranges and some low conviction. And there was, of course, some early volatility as well from, a little bit of the aftermath of Japan's Takaichi election. Okay, and that all kind of faded behind. But there was more of a focus that kind of shifted towards the mixed European data. Okay, they had some PMI data, which was, resilient, but not exactly explosive, as well as a major data miss on the GDP, guys. That was just yesterday. Okay, and that all kind of contributed to the U.S. dollar consolidating. Some late week flows kind of showed some risk on recovery in some spots, but no real clear trends. Okay, so that was just a little bit of the week there. As far as the U.S. dollar goes, okay, it started kind of soft, firmed up modestly midweek on some hawkish FOMC minutes, guys. So we got that came in the other day, and when you kind of compare it to the last time Chairman Powell spoke, whenever we had the last decision rate, these minutes, if you kind of compare them, it sounded a lot more on the hawkish side. Okay, and then of course we did have the eased GDP miss, which I mentioned earlier. Now the actual number on that was crazy. So the previous report had been 4.4%, and we were forecast to go down. So it was already forecast to drop down to 2.8%. But the actual number, guys, came out to 1.4%. So horrible. Okay, and that kind of ended the week on a little bit of a sour note, pretty much net flat. And then, of course, some more net short positioning remained extreme. But yeah, it was just kind of a dark way looking at the dollar over here, the Dixie, which is what I've got on the screen here. Now, a couple things on this we did. If I turn my drawings on just for a second, just as a reminder, we've kind of bounced into a much higher time frame demand zone a couple times. And this last few weeks ended up being the third time, kind of the end of January. But we did have that monthly demand, which is that orange box. And then we had a daily demand down here, which got bounced into it once, twice, and then a third time. So that's kind of where we're at. Now, after it bounced, it created a brand new daily demand zone. That's going to be this rectangle here. Again, if I turn my drawings off, it'll be easier to see. But we're talking about this green candle right here. Pretty big indecision candle, followed by a nice spike out. So what happened? Well, when price left that area, this is the Dixie again, we kind of bounced into this former support that turned into resistance. And when we got to bounce down, what did we bounce into? The demand zone. Okay. Turn my drawings back on again, you can see it. Now I've got a green box inside of it. So that's going to be a 4-hour as well, a 4-hour demand inside of the daily demand. So we're talking these candles right here. Okay, so what happened? Price came down, bounced into these demand zone areas, and now we've gotten a new push away. A new push away to the upside. We've broken the structure. So where's the next spot that we could go to? Well, as always, prices like to bounce between higher time frame supply and demand zones, guys. So the next one I see is clear up here. Again, if I turn my drawings on, you can see it. I kind of drew it in. Daily zones, I always draw in with yellow boxes or yellow rectangles. But I could very easily see price going all the way to the next higher time frame supply zone. You see, I've got a couple red ones here. That's because smaller time frame. That's going to be a 4 hour here, 4 hour here. Yeah, I could see a little bit of a bounce off of that, but ultimately, I think it would just bounce off and come back down. So, if we come back up to the supply, get a little bit of a bounce, maybe we reject and come back to this double top, this form of resistance, turn into support, and just continue upwards. And then again, we run into this supply zone here, get a bounce. Maybe we get a push back down to a form of resistance, and then come back up to ultimately to the demand zone, the higher time frame, the daily, right? So that's if I had to put my money on what we're going to see over the next few weeks or whatever, then that's probably something like what I'd be looking for, something like that. And then of course, like I said, be a form of resistance point right there to where we could get that new bounce. So that's kind of sort of if I had to put my money on it, that's what I'd be looking at. Just from an index point of view. Again, just looking at higher time frame demand and supply. Okay, swing high and then swing low. Now it could chop sideways. It could go side to side. It could completely drop all the way the opposite way of what I just said. Who knows, right? But I'm just simply saying what I'm looking at from a technical point of view. But anyway, that was the dollar. And if we kind of skip on over to some major currency pairs, euro dollar, so it held some early strength on that European PMI beat that I was talking about. On that one, the manufacturing was 50.8 versus the forecast of 49.9. The services was 51.8 versus a 51.9. So that did push the euro dollar above 118 briefly, but consolidated lower near the 117 level on the US dollar rebound. So again, just looking over here at the euro dollar, and I'll just kind of touch through a couple of these majors or a few of these major currency pairs real quick. But as always, if I go to a daily and look and see where my higher time frame demand and supply zone are, okay, obviously this is a really big swing low, but it's a long ways away. I did kind of draw up another daily demand that would be this red candle here. Obviously pulling that forward, you can see where price just bounced in the last couple days. So obviously, my guess, my projection is we would probably look to see a bounce upwards because we had a daily demand, but you also see that we got a smaller candle inside. So that's going to be a 4-hour demand. So there's my 4-hour daily demand zone confluence. My favorite setup in the whole wide world. If I drop it down to a 4-hour, you can see back over here to the left. I think that we've got some decent, stop loss orders just kind of chilling over here for these buyers here that bought. This setup looks very similar to the way gold was actually shaping up. But anyway, yeah, buyers stepped in to push price up and then push price up again here. So of course, if they're buying in that area, okay, where are they putting their stop loss orders? Down here, and of course their sell orders, which the big banks and the institutions need sell orders to fuel their buy orders. And not to mention the unfilled orders from the 4-hour and daily demand zone confluence. So I think that that's a pretty good spot. Again, we already kind of tapped into the liquidity that I mentioned from this double bottom over here. So now the question is, are we going to start pushing to the upside? Well, obviously the higher the time frames, the better. I should say the more accurate, but it's worth going down to the smaller time frames as well to see if we have other supply zones that could get in the way. And that's why I drew up these red boxes that you see right here. Okay, there's a 1-hour supply zone, and that's a very nice zone that ended up pushing down, and that's the one that actually bounced into the demand zone confluence, as you can see there. So, so what happened? Well, just yesterday we came back up and we tested that supply, and we got a nice push down. In fact, if I go down to a 15, I actually drew this up to where I had the 1 hour supply, and then I also had a 1 hour demand. And just to show you guys the power of supply and demand zones, if I go down to a 15 on this, okay, so demand zone created, bounce into the supply ended up catching a bunch of orders to the downside, pushed it down. What happened? That supply zone pushed price down into another demand zone, which is the 1 hour. Okay, I'm just magnified into the 15-minute right now, but it dropped into the hourly demand zone, and what did it do? It turned around and pushed it right back up. Okay, so that's a supply zone working out to the downside, and that's a demand zone working out to the upside. So there you go. Prime example of the strength, the power of supply and demand zones, really on all the time frames. But again, guys, I personally, even though I trust them fairly good on the smaller time frames, I trust them even more on the higher time frames. The monthly, the weekly, the daily, okay? And the 4 hour is really the last one that I trust almost with my life, okay? We start getting into the 1 hour time frame, 30-minute demand supply, 15-minute supply and demand. They are still good. They are still pretty strong. I just don't think they're near as strong as the higher time frames, okay? Think about it. The banks, the big boys on Wall Street, the hedge funds, all right, the insurance companies, everybody that's throwing around money in the interbank system, they're typically looking at the higher time frames. There's no way around that, right? So yeah, that's why I try as much as I can to stick to the higher time frames. That's just where I've had the most success personally. Okay, now I'm playing around with some other backbone strategies, which is kind of an extra filter added to my supply and demand zone strategy that I got from a new company I'm with, wherein I got a 100K account. It's a funded account. Did a couple interviews for it, and I gotta say though, just early results from it, it's been working like a charm. Okay, working like a charm. So, and it does involve going down to some smaller time frames, 1 hour time frame, 15-hour time frame for their scalp strategy, 15 or 5 minute. But I think I'm more comfortable with the 15-minute when it comes to the scalp strategy. But it's essentially what I'm already doing. It's just utilizing a few moving averages, an RSI, relative strength index, going to the extreme levels, meaning 80 to the top side for shorts, 20 to the downside for longs. Okay, now that's just one piece of the puzzle. That's not the end all be all, but just adding that filter in, as well as adding in some exponential moving averages, making sure the 8 is above the 21 EMA on the daily. Okay, for my just verifying my trend. Now, trend is ultimately defined by higher highs and higher lows, but it's nice to also have kind of a mechanical way to verify that as well when it comes to moving averages. So 8 above 21, it's a long. And then dropping down to the smaller time frame, ultimately to the 1 hour, okay, which is the other piece to the backbone strategy that they have. I've got to make sure in this case, if I'm going for a long position, that my 50 EMA is above my 200 EMA. And then whenever I go to get into the trade, price has to drop down to the moving averages, but obviously dropping down for the best price, the cheapest price at the 200 EMA, okay? Now, my spin on that is making sure that those 200 EMAs, whether it's a buying or selling, my rule is there has to be a supply or a demand zone there. Okay, so that's really where I've added the spin, because ultimately price, again, I say it a lot, price bounces back and forth between levels of supply and demand. Okay, and a hell of a lot more accurately on the higher time frames. So that's why I'm looking for those daily and 4 hour there. Now, I'm comfortable with looking at 1 hour and 15-minute zones. That makes it a lot easier for me to buy the zones, because these filters are helping to filter out some of the bad ones. There's institutional supply and demand zones, and then there's just regular retail, if you will, supply and demand zones. I care about the institutional zones. Where are they the most extreme? Are they closest to the origin of an overall strong move up or down? Are they at the bottom of a curve if I'm buying long? Are they at the top of the curve in the premium zone? Okay, if I'm trying to short, bottom of the curve being the discount. Are they in the middle? If they're in the middle, it's no bueno. It's no go. It's diddling in the middle. I don't want to get chopped to pieces in what I call the retail chop zone. Okay, that's just something I kind of came up with on my own. So, but anyway, outside of that, just looking back at some of my notes over here, so that was the euro dollar. Now, I do not believe it is, yeah, so euro dollar is obviously giving me a bearish signal. Okay, it's giving me a -7 signal. So if I just take another quick look over here, now I've got to keep in mind that we have bounced into that daily 4-hour confluence I just talked about, right? So do I want to be selling do I want to be selling something even though it's giving me a really strong bearish signal on the edge finder? By the way, guys, if you want to get your edge finder, you can always go to a1trading.com. Trader Nick and company will get you hooked up over there. This will change your trading for the better. There's quite the discount going on right now. I don't know how long it's up, but it should be 40%. So yeah, I would. Oh, there you go, right there. Hurry, this sale ends in 1 day and 7 hours. Okay, so that means by the end of Sunday. Okay, so if you guys are interested, definitely go check that out. There you go. Okay, the price is normally $13.99, but there's a huge discount. Okay, looks like you can get it for $8.30. So go check that out. Let me know if you have any questions on that. I've been an avid user of it for the past year. It has completely changed my trading, guys. So anyway, back to the show over here. It's giving me a bearish signal on euro dollar now, but it's in a discount zone. Well, number one, if I'm looking at swing low to swing high, it's in the middle. Now it's nice to see that we got this kind of double bottom over here acting as a bit of a support, potential support. Now it's not really abiding by it, so I can't really utilize that. But the point is, it's too cheap for me to be selling because now I'm selling into demand. I don't want to do that. I need price to go back up somewhere and catch one of these supply zones, possibly on a smaller time frame. And probably the best one I'm seeing just off the top of my head is probably going to be this one right here. Why? Because it's at the beginning, it's at the origin of an overall strong move down. Okay. Possibly in here on some smaller time frames, but remember, the smaller time frame you go to, the less accurate it's going to be just by nature. But as you can see, I got my 50 EMA below my 100. So I would, if it had not hit this demand zone confluence, this would be a short right here all day long. Price coming up, touching the 200. All I'm asking it to do is go just a little bit higher to catch the unfilled orders. So this right here is really where my trading strategy kind of adds to this backbone strategy, because by definition, you just want price to go up to the 200. Now pierce the 200 and then find a place to sell up here. Well, if price comes up here, I also have to make sure my RSI goes above the 80 level, which is that red line. If I just look into my RSI, see I got a red line at 80, red line at 20. Okay, those are my extreme readings. So I want it to be majorly overbought, okay, in the 80 zone before I sell it. So that's what I'm looking at. But again, rather than that happening and just selling it at the 200, I personally want to sell in a supply zone, so I can catch these unfilled orders as close to the origin of an overall strong move down as absolutely possible. So that's euro dollar. Not a whole lot left to be said on that. Pound dollar, it was pretty volatile as well, lifted by the UK retail sales. Surprise was a 1.8%, and that's your month over month reading versus the 0.2% previous number. Previous number also was 0.4%. I'm just seeing that. And then the PMI data, manufacturing 52 to 51.5, and then services was 53.9 versus the 53.5, but ended down 1.6% below 1.35 on Bank of England cuts. So let's go take a look at pound dollar. It is in a nice looking downtrend. However, you can see we've got a confluence. We've got a demand zone confluence. Okay. As always, when you guys see a yellow rectangle, that's a daily demand zone. When you see a green inside of it, that's my 4 hour. Usually my 4 hour. So it's bouncing into this demand as we speak, very much like euro dollar is the one that we just looked at. Okay. Now pound dollar, I think is giving us, yeah, it's giving us a short signal as well. The short signal, by the way, guys, is from the fundamental and sentiment analysis, as well as a couple technical readings like seasonality and moving average crossover on the trend. Okay. So that's giving me a clear bearish signal to sell. but it's not telling me to go out and smash the sell button. It's saying, Tiger, go look at the chart and time an entry. So can I time a short sell when I'm inside of a 4-hour daily demand zone confluence? Hell to the no. I got to see one of two things happen. I got to see price actually have the power to chew through down here and close, and then maybe get a retracement up for a place to sell. And oh, by the way, make sure I'm aware of this demand zone confluence down here. If that happens, great. If not, then I would want to see a push from where it's at, again, like I just mentioned earlier, somewhere at one of these supply zones up here for a possible sell at that point. Okay, it really just depends on what happens. What happens right here? Okay, is it going to continue with this, more recent counter trend trade? Because it looks to me like higher time frame, it's been pretty well up. But then you kind of look at the most recent legs, and we're in a little bit of a downtrend. Okay, lower high, lower low down here. So, by definition, that's downtrend. But we're in that demand zone confluence. So this is too big of a risk to be doing anything, in my opinion, in that area. Okay, so I'm going to sit on the sidelines and wait for it to paint a picture of if it wants to break through the zones and close to get the retracement, or if this demand zone is going to push price up to where we can find a more expensive price to sell. Okay, so that's pound dollar. What about dollar yen? Well, the yen weakened midweek, pairs up 1% to 155 plus, but it held the range amid post-election policy stability, and it ended the week choppy. So let's go look at dollar yen real quick. Let's see here. So dollar yen, I do believe, is off my radar. It is a neutral rating. Okay, so it's not giving me the permission to go out and buy or sell this instrument. So I'm basically sitting on my hands. Now, obviously, coming off the intervention threats that we've been hearing about for the past handful of weeks, and as far as I'm concerned, I don't really think it's done a whole lot of anything. Some people said they were doing a little bit of fake outs. But currently, where are we at? Well, we've been going. The yen's been weakening and weakening and weakening, but all of a sudden, it's gained some strength a couple different times to the downside. We have created a double bottom. So basically, this to me looks like a big, wide, choppy sideways. What it wants to turn into is like a sideways movement. So, since we've curled back around, just like we did back here, well, looks to me like we might be heading up somewhere, right? So if I'm looking overhead to the nearest supply zone, which again is where prices like to go to, it's like a magnet, guys. Supply zones, higher time frame supply zones are like magnets. So it looks to me like price is trying to head that way. Now, will this spot right here create some type of a supply that could potentially cause problems? That's your daily. Do I have any strong 4-hour within? I don't think we do, ladies and gents, because if we look at this price action, what happened? Well, the origin of the overall strong move is up here. But where's the candle to the left of it? Well, it's way down here. So, in other words, this was a Sunday gap straight up. So I didn't have a candle to the left of it. In other words, I didn't have much consolidation. It was just a bounce up on Sunday, February the 8th. Okay, when that Sunday intra-week session opened, and then we just went straight down. So again, there's no consolidation to the left of it, not until you come all the way down here. So I say all that to say I don't think I'm too worried about this area here causing a bounce back down if price were to rise. So I'm going to remain focused on these supply zone confluences up here. It's a long ways away. So if you're trying to buy your way back to it, there are a couple demand zones here. I just don't think I have one on a daily in this immediate area. Guess what? I kind of lied to you. Let's see here. I would say that this is a leg in candle here. 1, 2, 3, 4. That looks like four base candles to me. So yeah, you could look at this as a big demand zone, but 4 candles is too many for me to be that excited about as far as utilizing it as a daily zone. I like 3 candles or less, and that's clearly 1, 2, 3, 4 candles. So I think I'm just going to stick with going to the bottom, go down to the 4-hour, because it also presents a very wide demand zone. If I go wick to wick on that red candle before the big strong move up, I mean, yeah, this is basically what your daily demand zone is going to be, but that turns it into well over 100 pips. Well over 100 pips. That is a very wide range for a zone in my taste. For my taste, that's over 120 pips, guys. That's basically just under the average true range as a whole for the dollar yen. Okay, this thing moves quite a bit of pips. It does. 132 pips. That's your current average true range. If we look where this line right here is going, that white line. No, I'm sorry, wrong one. This one up here, the white line. Okay, to the left, far left. See, it says 134. It says 1.34, but just kick the decimal point to the right, two decimals, and or just ignore the last digit, drop the decimal, and that's your pips. Okay, so anyway, it moves quite a bit. I do like that about dollar yen. So yeah, I would just look for a simple retracement down to one of these demand zones. I don't really have anything looking that great on a 4-hour time frame, so I'm just going to go down to a 1 hour, and here we go, guys. So there's an indecision candle here. This is, of course, inside of this daily. If you wanted to look at it like it is a daily, I don't really particularly care too much about it, again, because it's just too dang wide. It's too big of a range. But anyway, going back to the 1 hour, that's very clearly a small time basing sideways before having a strong move out and giving us some gaps. And then the same thing down here. Down here, yeah, that you could call this a day. I mean, here's the thing, guys. Yes, you could call this a demand zone right here. By definition, it is, but let me see here. Why did I not? Actually, yeah, I guess I have to keep that up because that's still within this would-be daily demand. But also, when price left this area, it actually broke structure to the left. Okay, it broke this wick. So yeah, that does remain a 1 hour demand zone. I just feel like it's probably going to catch a bid a little higher on this one. That's just kind of my thinking on it, because you do kind of look at all these topping actions over here to the left. There's a top, obviously the wick here, top there. I feel like it's going to try to catch a bid right here. And oh, by the way, the volume spread analysis candles, as you can see at the bottom, they are kind of growing right there as price left and gapped up. So I personally, if I were to buy this asset, I would be more interested in the higher up demand zone. I don't say that too often, but in this case, I just feel like there's a lot of former resistance points that are probably going to scoop it up and push it back away. Yes, I could wait for the higher probability setup, which would be obviously lower on the curve and closer to the origin of the overall strong move up. And when I look at all these former resistance points up here, guys, it's kind of hard to ignore that. And by the way, that is, of course, at the top of this daily. So I really actually like that. And again, 90% of the time, I'm gonna pick the demand zone closest to the origin, like this one down here. Okay, but in this case, that's a little too hard to resist, if you know what I mean. So yeah, if you're trying to buy dollar yen and you haven't gotten in after the breakout of these former resistance points yet, obviously you'd want to get in on a bounce back to the downside, and I would think that would be a pretty good spot. So alert setting right here with the anticipation of buying here. As long as the 200, which is the light blue, as long as that remains above I'm sorry guys, the 50 is the I can't talk today. The light blue is the 50. As long as that remains above the dark blue, which is the 200 EMA, then that's going to make this a pretty sweet little pullback, get you some discount, come back in here, catch the unfilled orders, and then ride that trend all the way up to the top, right as at the top. Okay, you got a supply zone up here. Okay, so it gives you a clear shot to go for. Obviously, you're going to want to be careful in this area. Sorry, this is the one I meant to say, guys. Into the supply, the overhead supply. Okay, so there's a potential trade right there. Again, we're just simply buying in the unfilled orders here, the demand zone. So that's your dollar yen. Aussie dollar modestly down, despite the AUD employment miss, which was 17.8 thousand versus the forecast of 20,000. So they missed it by just under 3,000. The employment was steady. It was a 4.1% versus 4.2%. So that's obviously good for the Aussie dollar. Let's have a quick look at the Aussie dollar currency pair. As far as Edge Finder goes, there is some pretty good Aussie strength going on right now, guys. I know that because if I go to the macro scanners and look at my surprise index at the very top, when this loads, you'll see the Aussie dollar. 2/3 of its high impact red folder events have exceeded expectations, which is a very good thing for a currency that you're trying to buy. Okay, that's a wonderful way to find out if it's strong or weak. So Aussie dollar number one, US dollar number two. The euro is tied with a couple of currencies I don't even trade, the Turkish lira, the South African rand. So I personally just skip those, ignore them. None of my brokers have the access to trade them, and they're not as good on the liquidity anyway, guys. So stick to the 8 majors: the Aussie dollar, the New Zealand dollar, the euro, the Swiss franc, the Japanese yen, the Canada dollar, the US dollar, and the British pound. That took me a second. Okay, those ones are the 8 majors for a reason, because they have major liquidity. Okay, 8 majors. So, but anyway, yeah, and it's no surprise if you look on this list while I'm here. Okay, Aussie is the strongest currency, but the weakest currency is the Japanese yen. It's only exceeded expectations on 20% of its high impact red folder events. So what do you think is going to be at the very top of the top setups? Do you think Aussie yen's going to be up there? I don't know. Let's go look. Bam! Very top. At the very top, guys. So Aussie yen's getting the strongest one. I'll take a look at that here in just a second as soon as we finish taking a look at these major currencies, okay, the major currency pairs. Aussie dollar, I've already kind of touched on the notes I had written up there. So yeah, again, it's a neutral score at the moment. I do want to see specific. Okay, so it's a neutral 4. So it really just needs one of 2 things to happen. It needs either one more extra point of Aussie strength, which it's already pretty dang strong. So it's probably going to have to get a boost from some negative US dollar data. Okay, it's got to have one of the 2 in order to give me, a little bit more of a stronger reading, a 5 or higher. I got to have a 5 or higher when I'm trying to buy buy from the top setups list. If I'm selling from the top setups list, I need a negative 5 or less. Okay, now preferably 7s, 8s, 9s, or -7, -8, -9. Okay, the higher the number, the better on the long side. The lower the number, the better on the short side. So anyway, if anything, it's bullish, but it's just not strong enough to buy yet. So we're currently kind of at a topping point, a resistance point on Aussie dollar. Okay, if we're looking at the 1-hour time frame, we have bounced off of this 2-hour demand zone quite a few times, actually. I took a long on this, by the way, when price hit this demand zone the first time. I ended up buying on this candle here, and I ended up selling up here. So I did make money on this this past Tuesday. This was one of those Monday, Tuesday trades I told you about. So this one did pay me, but at this point, I didn't really have anything else because it just went straight sideways. So there's nothing I could do about it. In fact, that's some old trend lines there I can get rid of. So really the next move, as far as I'm concerned, is looking at a 4-hour demand zone right here, guys. It's a little deeper down. I'm done with this demand zone. It's been touched. It's been mitigated. All of the potential unfilled orders have been used up. And oh, by the way, I even took a little bit of risk on this, guys, because where is that demand zone in relation to the swing low and the swing high? Where's it at? It's in the middle. Did I diddle in the middle? Did I play around in the retail chop zone? I did. So, guys, it's okay to do it when you've got a few years under your belt. If you're a brand new trader, you will get chopped to pieces until you figure out the nuances and completely learn the nuances of supply and demand. This is the highest probability down here, okay? But I know a thing or two about a thing or two on some other time frames, looking at some other odds enhancers, okay? So that's why I personally felt comfortable taking the buy there. And then the other reason is at the time when I bought it, I had the 50 above the 200, and price came down and pierced the 200, caught the unfilled orders from the demand zone, and that's the whole reason I bought. Okay, so it's actually given a pretty good signal, even if you're a brand new trader. But as far as supply and demand trading, the main idea is to understand is you want to buy as close to the bottom as possible. Curve analysis, okay. You gotta put your trend-based fib extension on. It will break your scoring into 3 quadrants. Okay, the top quadrant is your premium zone. Okay, that's where you want to sell. The bottom is your discount zone, and then obviously the diddle in the middle. So I broke the rules, but I did it because I've been studying this stuff for 12 plus years, and I knew how to make it work. So anyway, that's your Aussie dollar. If I'm looking at a potential setup, I would basically need a big discount down here, and obviously an overhead supply, which on a smaller time frame, that's going to be a lot more prominent to buy and sell before we get to supply. So that's Aussie dollar. I got two more guys. Kiwi dollar, pressurized by the Reserve Bank of New Zealand's hold at 2.25%, which is their rate release that they had. It was what they expected it to be. And let's see, the statements ended flat to lower. Okay, so Kiwi dollar, this one was giving us at one point a bullish signal, then it flipped to bearish, and now it's back to neutral. So Kiwi yen, where you at on here? These are all my neutral scores, by the way, guys. So neutral -2. So there's just nothing to look at. We'll take a look at the technicals anyway. It is very, very slightly bearish, but it's also in a demand zone, just like the euro dollar, just like the pound dollar. So I've just got zero interest in it. Not only is it not on my bearish list or bullish list, but it's currently in a zone, and I do not want to go against even that -2 neutral bearish score, if that makes sense. So we're going to skip New Zealand dollar until it gives us some signals or breaks some structures. Dollar CAD advanced slightly on the Canada dollar CPI, which was a miss, by the way. So their inflation gauge came out to be zeros on the dot, 0.0%, month over month, of course, versus the forecasted 0.1% that they were expecting. The median was 2.5% year over year versus 2.5%, so that one met expectations. And then the trimmed was 2.4 versus 2.6, so that's obviously a little bit on the bearish side as well, guys. So dollar CAD, not really a whole lot there. It is not on the list. It is bearish, if anything, but it's neutral. So just quick look at it from a technical aspect. Daily time frame, we got lower lows, lower highs. Now we're kind of just cluster, whatting and going sideways. You can very clearly, prominently see I've got some former support lines drawn in. So we'll see if we get any type of push from those. Daily demand, daily supply, nothing really in this immediate area. There is some a little higher up for supply, but we'll just go down to a 4-hour. And you can see I've got a 4-hour supply here, which is currently where we're testing, okay? And then down here, I've got, that is by definition of demand zone. But again, if we look at this a little closer, guys, turn off my drawings for a second, that wick on the leg out candle, do you see how much farther down it is than the basing candle? I don't like that. I like the bottoms, I like the candles to be relatively the same. But you can very clearly see that this wick on the leg out candle, will you quit that? What the hell's going on? That wick is going down much lower. So that's a little bit more of a liquidity sweepy typey action. I don't know if that's a real word or not, but I just created it. So we'll see. But anyway, turning my drawings back on again, we're bouncing in the supply. So obviously we're at the high end of the curve. This is the premium zone. So if anything, I'd be wanting to sell this, but I don't have a good enough signal. Again, it's a neutral score. Yeah, if I'm just looking at it from a technical only basis, I could definitely see, price coming down, testing out the demand zone down here. If it does not, obviously turn around and break through and retest and go the other way. So it's real stupid to say, well, it could either go up or it could go down. Well, no crap. Anybody can do that kind of analysis. But because I don't have a signal, I'm just going to say that's what I'd be looking for. I don't have a signal. I don't have a reason to buy, so I have no reason to analyze it any further than that. So that's that, guys. That is the majors. Just a quick look as well at the top setups themselves. Aussie yen being the most bullish pair I've got. So let's go look at that. I've watched and sat and I drooled and I looked at this thing for the last 3 days and I just couldn't get a damn signal on it. But if I'm starting at the daily, this thing's clearly up, as you can tell. We're a long ways away from any 4-hour daily demand zone confluences, so I can't really look at any of that. And if I go down to the 4-hour, I've got a 4-hour down here, so that's going to be the highest probability zone working out. I got to update this since I drew it a couple days ago, but this is longer term what I'd be looking at if we get a retracement down. We did kind of break through these structures over here. We broke and closed above these structures. So we are, let's see here, currently trying to chew through the rest of this supply zone here on the way to the higher up zone. So perhaps I'd have to look at this at a smaller time frame, knowing that we have broken these structures. So let's go down to a 1 hour. Now, let's see here. What did I do on this one? Yeah, this is actually one of them I did not get into because I was looking right here. Let's see here. Well, so obviously this is the 4 hour demand zone I was just talking about. I have a 1 hour zone here. I've also got a triple bottom just ahead of us. So I can guarantee you guys, we're gonna, if we come down to this point, we will get some type of reaction. Now, is it enough reaction to turn around and push price all the way back up? I don't know. But we will get some type of reaction because there is liquidity sitting under all three of these points. Because if you think about it, these traders in here that bought and pushed price up, they had enough strength to push price up and break structure, push through that blue dashed line, which you see, which just simply means much higher time frame support and resistance lines. Okay, so there's going to be some strength in this area, and they're putting their stop losses down here, so that's going to be sell orders. And we have a very clear understanding of how and why that demand. This is a a strong demand zone. Not only everything I pushed out, but what happened when price came back? We jumped into that area, and then it pushed price again away again. Okay, so these buyers here, same thing. They left their stop losses under here, which are sell orders. Price comes down a third time, and then they push price away. Okay, there's enough leftover buyers in this area to push price up for a 1, 2, third time. Okay, so in all these examples, though, they've left stop loss orders down in this area. Now, it could be deeper than that. I just kind of generalized it. But there's stop losses. And it just so happens they're kind of half in and half out of this demand zone where there's more additional unfilled orders. So all I'm looking for is to finally break this triple bottom, come down here, collect these liquidity points, drop a little further into the demand zone to collect the unfilled orders and buy and chase price all the way back up to the swing high. So that is Aussie yen. That's what I'm looking at from that time frame. But it just depends on how low I want to go. Okay, 1 hour, by the way, 50 is remaining above 200. That is good. But what about the 15 minute? Do I have anything on a 15 minute? I mean, I drew another demand zone. And as you can see, what happened? Price came down to this demand zone right here. This is a trade I did not get into. This is one of them. Okay, price bounced in Friday. Yeah, so this is right when I'm paying. Oh my God, why did I not get in this damn trade? That's literally right when my live stream started, 6:30 a.m. my time, Central Standard Time here in Kansas City. Price dropped in to this demand zone. This demand zone was nice and strong. It pushed through this former resistance point, kind of broke this double top and kept going and broke a structure. Why the hell did I not get into this trade? Oh, by the way, the 50 is above the 200. What about I think that's what I was waiting on, guys, because if you look at the RSI, it remained up. Yeah, right here, it went below 20, but right here, which is what's important, it did not quite get below 20. So because of the damn RSI, I didn't get in this trade. Okay, look at that. That would have been a perfect trade. And then obviously the goal would be to take price up to the swing high, which as you can see right here is where it ultimately would have peaked into nicely at 9 o'clock a.m. 9 o'clock a.m. we had the manufacturing PMI numbers come out. That was a little bit on the negative side for the US dollar whenever that came out, which, well, anyway, it was the Aussie strength took over on that. We had a big red candle, expanded range candle. So that was a pretty damn good place to get in, but I just failed to get into it. And I think that's why I didn't, guys. Again, the RSI did not go below 20. Okay, look right here. Oh, in fact, it didn't even catch it there either. Yeah, neither one of those spots. So that's why, guys. I thought that spot had went below. So neither one of these spots, neither one of them went under 20. That's why I stayed out of the trade. I was just sitting, I remember watching. I'm like, okay, just go a little bit lower, just a little bit more, just a little bit more. And it just didn't give it to me, guys. So I avoided it and I missed out on the money. So I didn't lose anything. That's obviously goal number one is capital conservation, right? But I also didn't win anything because I was so picky. So anyway, that was the most bullish asset. I'll just finish real quick with a couple of these bearish assets. Euro Aussie, Euro Swiss. Now, I don't know that I'm too excited about these two pairs, because if I look at the strength of the currencies, look at the euro. Remember, it's one of the stronger currencies. So do I really want to sell a currency that's matched up with a weaker currency overall? Probably not. So for that reason alone, I'm just going to skip those. And I'm going to look at this last one, and I'll be done. Pound Aussie. So the pound being one of the weaker currencies paired up with the Aussie that we've already seen is at the very top of the list, right? So let's go look at Pound Aussie, and I think we'll close the show out, and I'll be back on Friday morning. Yeah, this is it. This is the one I missed. This is the one I missed yesterday. I was so annoyed about. This is the second one I missed. But on this one, everything else hit. Everything hit, guys. Okay? This was a perfect trade. So daily, I'm going down. I got Cartman there. You can see 1 hour. Oh, this one went. I was looking at this on the scalpy time frame, guys. So let's turn my drawings back on. You can see Cartman here. Look what happened. So there's my wick, but I actually looked on a 10-minute time frame and looked at this red candle, which gave me a supply zone before a big drop. Okay. So it started with that. We broke some structures. We broke some more structures. Went down here. Okay. Now on the retracement of this, I have to go to a 15 because that's the time frame I look at my indicators on. 50 is below the 200. Check. RSI went above 80. Check. And price came up to the supply zone, right, Tiger? So why didn't you short it? Well, it looks like it hit the supply zone, but it didn't. Let me zoom in. And this is how picky I get, guys. Let me zoom in. If I zoom in a little deeper, can you now see? You see the top of the wick right there? It missed the supply zone. It missed the supply zone. It missed the supply zone, so I did not get in the trade. Just ignore this red line. Let's get out the old measuring tape. Top of the wick to the supply zone. Oh, that's even less than I thought, actually. 0.00002 pip. Translation, 0.2 pip. So look at that. I even gave it more credit earlier. It missed it by 0.2 pip. So if you imagine 1 pip or 1 point, okay, so the equivalence of stocks would be 1 point. 1 pip, cut it in half, and then make it even smaller than that. It just barely missed the supply zone. So because it missed it, I didn't get in. And the funny thing is my alert even hit. So my alert hit right here. But what I decided to do was put a new alert right on the proximal line of that 10-minute supply zone I just showed. And it missed it by 0.2 pip. And then proceeded to just dump all the way down to the demand zone, which I would have bought to cover just ahead of. That's why I had my green line right there, guys. That was my green line in the sand saying, I'm out of this trade, but it just missed. So I spent the rest of the day cussing and discussing with myself on why the hell I'm so picky. Because sometimes, guys, I look for perfection. And sometimes you just got to step out. Sometimes you just got to put your money in. You got to put your money in to win. So, yes, I abided by my rules, but should I consider loosening up some of my rules? Hey, if we get within a pip or two, maybe we just get within a spread, right? The spread would have probably got me in if I would have counted for the spread. So maybe I should get in a little ahead of the zone. Because sometimes price will hit the zone and just immediately drop without even going inside of the zone to collect more orders. So that looks to me like that's what I might start doing. I might start accounting for the spread and just add in another couple pips. And rather than waiting for the touch of the zone, perhaps I'll start looking at it just below the zone so I don't miss these annoying damn things where clearly supply was very strong. Because if that supply zone was not strong, guys, it would not have hit. It would not have, you know, it if it wasn't strong, it would have chewed through a little bit. But that's clearly a strong supply, because it came right to it and then just basically blew on it, and it blew the other way. So anyway, that was annoying. That would have been another trade. But as it stands out, just to put a bow on everything, guys, that's trading. That's just trading for you. Some days you're going to have really busy days, and some days, and like I did for Monday, Tuesday, some days like Wednesday, Thursday, Friday, you're not going to have anything. Okay, nothing hits. So the point is, sit on your hands, wait for trades, wait for trade opportunities to come to you. Do not come to the opportunity. Make it come to you. Okay. Yes, it's annoying that I missed that trade, but I did not break my rules, and the best part is I didn't lose any money. Okay. Now, I didn't win any money either. That's why I was cussing and discussing all day. But anyway, that's all I got for you today, guys and gals. I'll be back at 6:30 a.m. Central Standard Time on Monday at Trade Like a Tiger. We'll go through some top setups, and we'll take a look deeper onto the economic calendar. We'll look at the updated COT report as well. We'll talk about that and more. Peace, guys. Have a good one.